Hi there, very good morning. Welcome to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where we take all your stock-specific queries with our experts. But before we get to all the queries, Ankita, let's take a look at how the markets are faring. A very start to this week, indeed.
Kanishka, markets are on a tear, and of course, the big boost is coming in from the GST overhaul, on the Independence Day that PM Modi had announced. It's an early cheer coming in for the markets on Monday morning. We are sitting at 24,956, an uptick of 1.3% coming in on Nifty. We are, maintaining those levels. As you can see, there's no selling coming in as of now. Nifty Bank also maintaining its stance. In fact, that is also up and away 1% in trade. 600 points rally coming in on Nifty Bank as well. Look at Sensex and the rally. We have almost 1,000 points up on Sensex. On Sensex also we see a 1% rally coming in. But sectorally, if you look at the sectors now, auto is in the fast lane. Now, auto is one of the biggest beneficiaries of this GST announcement. Especially the small auto cars could see a big boost coming in from a straight 28% to 18% GST. Automakers like Hero Moto, Maruti, Ashok Leyland, TVS Motor, Bajaj Auto, M&M, Eicher Motor, they're all trading upwards of 3+%. So auto is clearly in the fast lane. And besides that, we have the consumer durables that are in focus. Voltas, Blue Star, Whirlpool, Havells, all of these counters are buzzing. Nifty FMCG also firing on all cylinders on the back of that big boost coming in. So a great start to the week, I would say, Kanishka.
Absolutely, Ankita. A very great start to the week. But now let's get started with all the queries then. Requesting our viewers to share all their stock-specific queries. The number is flashing on your screen. So do ping us. Do mention your name, your stock name, your specific query and your holding time horizon. And to answer all your queries today, we are now joined by Gaurang Shah, Senior Vice President at Geojit Investments, and Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financial Services. Hi, gentlemen. Very good morning. Thank you so much for joining us today. Well, let's get started with all the queries. Then, Akshay, let me come to you first. So we have our viewer, Ekambarya, who's writing from Hyderabad. He wants your view on the power sector. Now, he says he holds 275 shares of NTPC at a price of 367 rupees. So he wants to know, is it a good idea to sell this particular stock at this juncture and instead invest in a new energy segment?
Good morning to all. So if you look at the price structure of NTPC, at least in the last 4 months, what you see is the prices being stuck in a very narrow range. There is a scenario where the prices are pivoting around the levels of 330, 340 zone. And I think it's on the cusp of a point where you might see a sudden price surge. And looking at the broader setup of NTPC, the probability of the stock staging a positive upside breakout looks high. So right now we are working with a scenario where 320 is the immediate support. The view continues to be positive till we are about 320, and looking forward for short-term targets of around 375. That is the first target from a medium-term 3-month horizon, and furthermore you can anticipate targets till 400 plus.
All right, so that's the view coming in on NTPC on the charts. But let me come to you, Gaurang. This is also from Ekambarya. He's a regular viewer for us, and he wants a long-term view on Tejas Networks. He's holding 175 shares at a buying price of 1,125. He wants to know if he's clearly sitting at a loss. He wants to know whether he should start averaging or should he start booking loss?
Well, thank you so much for having me on the show this morning. Good morning to all the viewers of ET Now and to all of y'all. A small disclosure, all recommendations this morning that I'll be giving out on the show is a part of our research team recommendation. Our company, Geojit or I, we do not have any personal investments or any financial interest in the recommendations that are given by, nor there is any kind of conflict of interest, but we give recommendations to our clients on similar line. They might have their investment interest. So on Tejas Network, well, the difficulty is the earnings and of course the management commentary, not only for the first quarter, but also for the last financial year, possibly third and fourth quarter was a little bit under the weather. And that's one of the reasons why we've seen a correction in the stock Tejas Network, which is of course a telecom equipment and platform provider. From a long-term point of view, our research team has a hold recommendation on the stock. So I did not get exactly the level at which the investors got invested, but if it is available at a correction of maybe about 5 or 10% from your earlier investment price, then from a long-term point of view, first of all, hold on to it. And if you have investable fund from a long-term point of view, then maybe you can average some percentage of the total quantity that you have at a higher level.
Okay, so that's the view on Tejas Networks. But Akshay, now let me come to you. The viewer hasn't told us, their time horizon. So let's take it from a short-term perspective for now. So this is Balan. He wants to know your view on Godrej Properties. He's bought it at the level of 2,400 rupees. So he wants to know whether he should continue to hold or shift to another stock like Brigade Enterprises.
Well, for Godrej Properties, what I understand looking at the charts is that we are trying to recover from a very important support zone, and that is the level of 1920. We have had multiple instances in the past few months where the prices have recovered very smartly from the levels of 1920, 1930 all the way till 2450. So I'm looking at a similar scenario of a recovery from the current zone where you can see with a holding of maybe a couple of months more, you can see the revisit of 2400. So continue to hold Godrej Properties. However, you need to maintain a strict stop loss below the support of 1920. So stop loss should be approximately around 1900. And in case of a recovery around 2400, that's the point where I would say take the money off the table or an exit.
Okay, so a whole call for now, but those are the levels to track as far as Godrej Properties is concerned. But moving on, Gaurang Sir, coming to you, this viewer, Deepa is writing from Ooty. She wants to know which is your preferred pick in the cables and wire basket, and if you could help us with the levels to enter in these stocks.
Well, honestly, levels is not my forte. I would leave it to Akshay to give the levels. But yeah, I mean, in terms of the sector, yes, the sector had a little bit of scare in terms of large-scale competition coming in terms of capacities, etc. So we have 2 or 3 investment ideas. One is, of course, Havells India. Second one is in form of KEI Industries. And the third one, I believe it is in Phenolics Cables. So these are the recommendations purely from a long-term point of view. Well, this new capacity that is going to come up will possibly throw a little bit of uncertainty in the immediate short to medium term in terms of, competitive pricing discounts coming in, which may lead to price cuts for the old players who are in this particular sector. But there is a huge opportunity for a lot of new players to come and coexist with the ones which are already there. So we have these 3 investment ideas: Havells, Phenolics Cables, and KEI.
Cables and KEM are the 3 recommendations by Gaurang. But actually, let me come to you because he wants to know the entry levels. What would be your picks from the wires and cable sector, and what would be the entry levels?
Well, specifically, if you are looking at the levels for Havells, first of all, the trend for Havells is strong from a longer term perspective. And if you look at the last 4 months of historical price charts on the monthly basis, the stock has been range bound around 1500 to 1600 zone. But the positive takeaway is time and again, the stock is bouncing from the levels of 1500. So today you have a scenario where the stock has opened significantly gap up. A few days back, there was a significant surge in volumes, and overall the way the prices are setting up, I think the stock is possibly aiming for an upside till around 1750 to 1800. So out of the entire stocks of this sector, I think this is one of the stocks which has a strong technical price structure and excellent risk reward which is offered at the current market price. So with a stop loss below 1500, you can look forward for targets till 1700 to 1750.
All right, so that's the fundamental and technical view about the cables and wires segment. But on that note, we'll take a very short break. Be right back with more of your queries.
And with me is Kanishka Sarkar, and we're getting all your stock-related questions answered. The number is flashing on top of your screen. So without further ado, keep sending in your questions, the stock price, your buying price, your holding period, and your question, and we'll get them answered by experts who've joined us, Akshay and Gaurang. So let's resume with all the questions then. This one's coming from Balan. He says he has Birla Soft and he's making a loss of almost 20 to 30%. Should he hold or should he shift gears? Gaurang, let me come to you for this one. And the entire IT pack is under pressure, and he's sitting at a loss of 20 to 30% on Birlasoft. Is there any chance that perhaps in the near future, there could be perhaps some sort of an up move coming in on Birlasoft? Or should he now exit this counter? He should be cutting his losses right now and perhaps shifting gears to some other counter.
Well, so the entire advice would be dependent on what is the kind of time horizon. So firstly, let me speak about the sector, because on the sector as an overall view of our research team is positive. That is the IT sector. The problem lies in the immediate short to medium term. After the disappointment in the first quarter earnings, our assumption is that the reflection of that disappointment might slip into the second earnings also, depending upon what the situation is in US with respect to interest rate cuts, with respect to economy, whether slowing down, whether there is a recession, and whether there are going to be budget or discretionary cuts. Our sense is that next 3 to 6 months is going to be challenging for the IT sector. Once we have clarity post this time on these factors that I mentioned, I think we will have some kind of stability coming back into the IT sector as far as earning is concerned, but it will take time. So we remain positive on the IT sector, large cap, mid cap, and small cap. Your question is on Birlasoft, on which we don't have a coverage currently, so I won't be in a position to give a specific whether buy, sell, and hold. But my advice would be that try to look at stronger names in the large cap universe in the IT, and then possibly some relatively stronger names in the mid cap universe. If I have to suggest some names, TCS and HCL Tech, excuse me, are the two from the top line large cap boys. And amongst the mid cap universe, Coforge or maybe something like an LTI Mindtree or an L&T Technologies would be a preferred, but it will need at least 1.5 year plus kind of time horizon for the situation to improve and reflect upon the earnings.
All right, so that's the view on the IT sector. Thank you, Gaurang sir, for that view. But stay on with us. And Akshay, thank you so much for joining us and helping us with all your technical calls. On that note, we'll let you go. But moving on and shifting focus to some earnings then. Jaiswal of Manas Jaiswal Technical Research Group. Hi Manas, good morning. Let's start with you then. Now we have this query coming from Thomas George, who's writing to us from Amsterdam. He's been holding 1,000 shares of United Spirits, bought at a price of 1,180 rupees. He wants to know what should he do at this juncture. Should he continue to hold or sell? What are the targets that we're looking at for this one?
See, right now the trend is looking weak, but the stock has very strong support in the range of 1250 to 1225. So I think since he is holding for a long time, I think he can definitely hold it. Keep your stop loss below 1250. On the upside, the stock has resistance in the range of 1380 to 1400. If it breaks 1400 and if it sustains above 1400, then I think in next move, stock can again come in the range of 1600 to 1640.
All right, so that's the view coming in on United Spirits. But let's move on to the next question, which is coming in for Tata Tech. Now, he has 72 shares of Tata Tech at a buying price of 1,000 rupees. He's sitting at a huge loss. What should he do? Gaurang, coming to you for Tata Tech. He's clearly sitting at a huge loss. Should he book out or should he hold on for the counter to move up?
Well, honestly, my first advice is that don't let your losses get so deep that it becomes difficult to recover. So you need to take an appropriate step in time so that your losses are minimized. Given the fact that our research team has a sell call on Tata Technologies, either at these levels or any pullback, I think we should exit zone. And the overall view on IT is that it will take quite a while for the IT sector to recover. For at least 2 quarters, I think there will be disturbance in terms of earnings because of the situation, what happens in US. And of course, then some kind of stability and then recovery. We have a sell call on Tata Tech from our research team.
Okay, so a sell call on Tata Tech and 2 more quarters of pain likely for the IT sector. But Manas, let me come to you for this one. It's a more broad-based query. If you could help with a stock pick of yours for a short term that is of around 1 week, which stock would you recommend?
So if you're again talking about short term, then I think one can definitely look at some auto names, especially Maruti and M&M. So my preference would be Maruti. I think even at current levels, you can enter in Maruti because stock has given a fresh breakout on the weekly chart. So one can take a long position here with a stop loss of 13,600. I think the stock has potential to test 15,000 rupees very soon, maybe in next 1 or 2 weeks time. And second is a buy call on Trent because after some consolidation, Trent has given a fresh breakout. That is a flag pattern breakout. The stock is trading above 200-day moving average now. So positionally, one can take a long position here. Stop loss should be around 5,400, and here the target would be around 6,000 rupees.
All right, so those are the counters that you could be looking at from that perspective, from a 1 week perspective. But let me come to you for Gaurang for this one. This is by M. Mathiwan, who's writing in from Chennai. He says that he has L&T Finance 1,000 shares at a buying price of 78 rupees. Should he hold or should he sell? Gaurang, L&T Finance, now we do see good growth coming in, but the asset quality deterioration has been a problem for L&T Finance. What do you feel for the long-term perspective? What should he be doing with this?
Well, purely from a long-term point of view, our recommendation would be to hold on to it. And a lot has happened in this company in terms of, selling off unviable businesses, consolidating the balance sheet, making it stronger. And the overall view on the BFSI segment that includes public sector bank, private sector bank, and strong NBFCs. The outlook remains extremely strong in terms of loan book growth, asset quality improvement, and of course, in terms of interest rates coming down. So long term, hold on to it.
Okay, so that's the view on L&T Finance. Long term, you could look at holding, but Gaurang Sir will stay with you. This viewer, they haven't given their name. Their query is on Yes Bank. They've been holding 50,000 shares of Yes Bank at a price of 21 rupees. However, of course, they're still sitting at a loss. They can continue to hold for another period of 2 years, but do you think it's worth holding on for that long?
To first of all say the kind of recovery that would be come through for Yes Bank. It's going to be a long path of recovery. There are some changes that are happening, but in terms of top management changes, consolidation, and then revival. I won't give any specific buy, sell, and hold on Yes Bank because we don't have a coverage, and our research team believes that there are better banking names in the private or public sector universe that you can look at. So no specific comments. As an alternative investment idea, if I have to look at one small private sector bank or two small private sector banks, then we have positive coverage on Federal Bank and IDFC First Bank. One needs to be extremely cautious in terms of getting into names like Yes Bank or any other name. Building up such a huge quantity in terms of your investment. What if things don't go well? That's the big question mark. So no specific comments on Yes Bank, but I would definitely say that there are better banks that you can look at.
All right, better banks than Yes Bank that you could look at. But let me come to the next question. This is Ignatius who's writing in. He holds 70 stocks of Indian Hotel at a buying price of 773 and 50, and he wants to know if he can be holding it for the next 8 months. What would be your view, Manas? And he says that he could hold it for a longer period of time, but for the next 8 months perspective, what's your view on Indian hotels?
Yeah, I think now Indian Hotel is ready to give a fresh breakout because stock was moving sideways. It was taking support near 22 moving average, but now since stock is trading above 22 moving average, I believe that stock can come in the range of 850 to 875. So one can definitely hold it, keep the stop loss below 740.
Okay, so that's the levels you need to track for Indian hotels. But Gaurang Sir, let me come to you. This is Acha writing from Madurai. She of course says that she's a big fan of yours, and her query is about Cochin Shipyard. She's been holding 107 shares at a price of 1,621 rupees. She wants to know, when do you think it's going to reach that 2,400 mark?
Well, first of all, thank you very much for those kind words. It's really appreciated at our end. Firstly, on the investment in Cochin Shipyard, as a disclosure, we have a buy recommendation. So my humble request to the investor is that investment in defense related companies need to be viewed with a 3-year, 5-year plus kind of time horizon, because order book takes time to get executed. It's a long gestation order book. There is complex technology, high precision that is involved in executing the order book. When it will reach 2000, well, I cannot put a specific time frame over there. But with a long-term time horizon, I think you could definitely see Cochin Shipyard recover those kind of levels that we've seen of 2000, 2000 plus. But it'll take time. So have a 3-year, 5-year plus kind of time horizon. Stay invested. You can possibly review your investment periodically. Don't view it every quarterly on earnings or every 6 monthly on earnings. I think every yearly comparison would make a fair summation of where the company is going in terms of earnings visibility. As of now, hold on to it.
All right, Gaurang and Manas, thank you so much for taking the time out and joining us. That was the last talk of the day. But we'll come next time at 11 a.m. tomorrow with all your stocks questions answered on the show. Kanishka and I will take your leave for now. Thank you so much for tuning in.